Welcome to Martian Investing, the place to learn and grow as an investor. Today, we're going to compare two of the most popular companies in the world, Nike and Apple. We're going to break down our analysis into four main categories or criteria. Our criteria are value, competition, brand value, and growth potential. First, we're going to cover value. The P/E ratio is a good way to tell how much money an investor must pay relative to a company's earnings. Having a low P/E is generally better, but it can change based on the industry. The P/E of Nike currently stands at 56.32, with Apple at 18.77. The market average fluctuates between 15 and 25. Cash is king, as they say. Cash can be used for things like share buybacks or to invest in future endeavors. So it's an important metric to keep track of. Nike currently has $6.4 billion in cash. In comparison, Apple has a whopping $285 billion. Debt is also something to consider when evaluating a company's value. Debt isn't always a bad thing, but it can indicate the financial health of a company. Nike has $3.8 billion in debt, with Apple having about $80 billion. Now, in comparison, Apple has a better debt-to-cash ratio, which can be important for managing future growth. Now, Nike stock is currently trading at about $73.58. Overall, the graph shows a clear uptrend. The one-year forecast is estimated to be $82.42, with the five-year forecast set at $138.58, both of which seem reasonable in my opinion. The dividend is currently at 1.09%, which is more of a bonus for owning this stock. Nike has also raised its dividend consistently over the past few years, which you can see from the dividend history chart. Nike is currently in a 15% dip, which could signal a buying opportunity. Apple stock is also on a general uptrend, although not as strong as Nike's. It's currently trading at $215.66. Its one-year estimation is $268.21, which to me seems a bit ambitious, as well as the five-year forecast, which is set at $467.21. Again, very ambitious. Its dividend is a solid 1.35% and could easily be raised with the $285 billion in cash they have. They are also experiencing a 6.6% dip, which again could signal a buying opportunity. Apple wins the valuation round and takes the lead ahead 1-0. Our next criteria, competition. Competition can be a good indicator at what future struggles a company could see in the future. It's hard to argue that any industry is more competitive than that of technology or fashion. Some of the main competitors of these companies are Google and Adidas. Now, in terms of market share, Apple owns 51% of the smartphone market in the US. They also own 9.6% of computers worldwide, which could offer expansion opportunities in the future. Nike owns 45% of the worldwide sneaker market, which is incredible. This round goes to Apple again, mainly because Apple has done a great job managing its competition and still grinding out big profits. Nike is also facing increasing competition from Adidas, who have doubled their market share in the US over the past 2 years. Our next category is brand value. Brand value, in my opinion, is one of the most overlooked things in investing. It can be a powerful indicator at the social and economic future of a company. Phil Knight bought the Nike logo for $35 while in college, which is a hell of a good deal. Apple's logo obviously has a lot of pull within the Apple community, with people paying $1,000 for a phone. It's hard to argue that brand doesn't play an important role. In order to quantify brand power, I wanted to look at some magazines and companies that do yearly ranking of the most recognizable and influential brands. Complex Magazine had Nike ranked number 1, Apple ranked number 6. Impact had Nike ranked number 9 and Apple ranked number 15. Business Insider had Nike ranked at 6 with Apple not ranked. I'm not sure how much validity should be given to these rankings, but they seem to all come to a similar conclusion. Nike wins this round, closing the gap with a score of 1 to 2. Growth potential is also a huge factor to future value. If a company isn't growing, it's dying. It's the lifeblood of any company. First, let's cover Apple. Apple has fairly recently released their Apple AirPods, which seem to have done a better job catching on than most people thought. Their Apple Watches also are gaining market share in the wearable arena. This is also one of my favorite graphs, which shows growth of iPhone revenue from the first quarter of each year. Something interesting to see is how from quarter 1 of 2017 to quarter 1 of 2018, Apple actually sold fewer iPhones, but the profit per phone went up. Again, this ties into brand value, which we highlighted earlier. Another thing about Apple that has to be factored in is their service revenue, which has grown north of 20% for the past 5 years in a row. This graph outlines the services Apple has offered and accumulated throughout the years. I would caution, however, and many investors are beginning to worry about future iPhone sales. The belief is that charging over $1,000 for a phone won't last forever. I could definitely see this becoming a reality for the future. For now, though, they seem to be able to get away with it. Next is growth potential for Nike. Nike has been growing their sales about 14% in the past year. This has led many to believe Nike may be transitioning once again into a growth stock, which surprised me. One of their main competitors, Puma, has had their stock fall by 11% in the past 6 months, which could signal a market opportunity for Nike. Continuing with Nike, one trend in the US that has been booming is the e-commerce market. As you can see by the trend, the e-commerce market in the United States has been growing consistently. Nike, to tie themselves to this growth, has released their app, which allows consumers to manage and order things directly to their doorstep. The future is convenience, and Nike plans to capitalize on this by growing their e-commerce sales from 2 to 7 billion over the next 5 years. Nike wins the growth potential battle and ties it up 2 to 2. I give Nike the edge because I think Apple will be more limited by expansion due to cheaper technological options coming into play. You really could give this round to Apple, but I think Nike offers more potential in the future. I'm not going to leave this at a tie, don't worry. So we're going to have a sudden death round. Ultimately, in terms of a safe investment, dividend, cash, and P/E will decide the winner. All of these things can limit future risk, as well as indicate a fair value of a stock. Apple leading in all 3 categories leads me to choose it as the winning stock. Even though Nike loses, it still has something to offer as an investment opportunity. Make sure to like this video and subscribe to our channel for more investing videos. If you have any recommendations or comparisons you'd like to see, feel free to leave a comment below. Have a good day.